Hello, welcome to the weekly technical analysis review here at XM.com. I'm Rafi Barjan, currency analyst, and today is Tuesday, February 20th, 2018. Our pairs for today are dollar yen, the euro dollar, the pound dollar, and the dollar Looney. Starting with dollar yen, we can see the pair is enjoying a bit of an upside momentum. The near-term bias is fairly bullish. RSI is trending upwards, so it hasn't quite managed to reach the 50 neutral level yet. We are seeing immediate resistance coming from around 107.15. If we quickly shift to the 4-hour chart, we can see there's been a bit of congestion around that area in the past. We have the 50-period moving average around 107.50. And further up, we have, moving back to the daily chart, we've got the 61.8% Fibonacci retracement of that up leg from around 102.54 to 118.66 back in late 2016. If we look to the downside, we do have support coming from around the 106 handle. The pair did touch a 3-month low, 105.54, but it managed to close above that level, so therefore forming resistance around the 106 handle. If the pair drops back below that level, we could then see the 105 level coming into scope, and then below that we have the 102.55 area, which was a low back in late 2016. For the current upside momentum, though, to gather further strength, prices would need to break above the 61.8% Fibonacci retracement. That could potentially open the way towards the 50-day moving average, just above the 50% Fibonacci at 110.60. That would also help shift the near-term bias to a bullish one. In the medium term, though, we still have that bearish crossover with the 50 and 200-day moving averages, and the MACD is also still below its signal line, so it's therefore fairly bearish in the medium term. Moving now on to euro dollar, the pair is seeing some downside momentum, so the near-term bias is fairly bearish for euro dollar. We can see RSI has been trending lower, and it's currently just at the 50 neutral level. Immediate support is coming from the 61.8% Fibonacci retracement of the up leg from 1.2205 to 1.2554. A drop below that level would deepen the bearish bias, sending it towards the 78.6% Fibonacci retracement at 1.2280, and then below that we have the 1.22 handle, not too far from the 50-day moving average, currently around 1.2150. To the upside, resistance will likely come from around the 38.2% Fibonacci retracement at 1.2420. Above that, we have the 23.6% Fibonacci retracement at 1.2470, and a break above that level could then open the way towards fresh 3-year highs. We had another one last Friday at 1.2554. In the medium term, the pair is still fairly bullish. You can see the upward trending 50 and 200-day moving averages, and price action is still clearly comfortably above the 50-day moving average. Moving now on to the pound dollar. Pound dollar is fairly neutral at the moment. Prices have retreated from that 1.5-year high we saw back in January. We are seeing both support and resistance coming from around the 38.2% Fibonacci retracement of the down leg from 1.4344 to 1.3764. That's around the 1.3985 level. If the risk is to the downside, mainly we can see 3 successive days of declines. If we do see further declines, we could then see the 23.6% Fibonacci retracement coming within reach around the 1.39 handle. A drop below the 1.39 handle could possibly then lead the way towards the 50-day moving average. A drop below that would bring into question the medium-term bullish outlook. It's already weakened somewhat. We can see the MACD has fallen substantially and is still below its red signal line, and we can see that narrowing gap between between price action and 50-day moving average, although the gains we saw late last week did take prices slightly back above the 50-day, slightly widen the gap between the 50-day moving average. Upside resistance, we could see it coming from the 50% Fibonacci retracement at around 1.4055. Then we've got 61.8% Fibonacci retracement at 1.4120, and then we've got 1.4220. That would need to be challenged before cable targets fresh highs. We can see it's still some distance away from that 1.4344 level. And our final pair for the day, we've got dollar Looney. It's looking fairly bullish in the short term. We can see prices have managed to once again rise above the 50-day moving average, though they met resistance at the 50% Fibonacci retracement of the down leg from 1.2919 to 1.2248. That's around the 1.2585 area. Further gains could then see resistance coming from the 61.8% Fibonacci retracement at 1.2660. That's an important resistance level that is attempted a couple of times over the past months to break, but hasn't managed to do so. A successful break above that level, though, could then open the way towards the 200-day moving average, currently around 1.2720, and that would help strengthen the upside momentum. And then we've got the 78.6% Fibonacci retracement at around 1.2775. To the downside, the 50-day moving average is providing immediate support around 1.2550. A drop below that level would risk shifting the near-term bias back to a bearish one, and then also risk losing the 1.25 handle. That's the 38.2% Fibonacci retracement. Below that, just above the 1.24 handle, we've got the 23.6% Fibonacci retracement. A drop below that would then open the way towards that 4-month low 1.2248 we saw back in January. That's it from me. Thank you very much for watching, and have a great day.